everybody. Welcome to the Trading Market Technicals morning call video for Thursday, January 24th. Had another update yesterday from the help of IBM and Google. IBM actually accounted for 65 of the 67 Dow points, so I wouldn't read too much into yesterday's action. However, we have been grinding higher since the beginning of the year, and that's exactly what's going on. And I don't see any signs of stopping unless we have Apple, which reported yesterday, actually for the first time, earnings weren't so great, and Apple was down, actually trading around the 460 area, way below our 467 long-term trend line, which would have been our next support. I'm going to analyze Apple and give a full report on that. However, the market in general as a whole, short-term trend remains up. Longer-term picture looks fantastic. There's no reason to get in front of this freight train. Now, however, I personally, with the market this high, this highly elevated with low volume, I'm looking for, if any, strong stocks that haven't gapped up on pullbacks, on a decent pullback during the day to trade, and or relative weakness. Stocks that have gapped down, but didn't gap down so extensively. I'd like to trade stocks that are either gapping lower, have relative weakness to the market, and have made a good move and a good run. To me, I think risk reward is better that way. But again, that's just me. You have to adhere to your trading plan. So indicators are way overboard, but have not shown signs of rolling over as of yet. So the trend remains up. The longer term picture remains good, healthy. But again, we do need a pullback, no question about it. Even a 3-4% pullback in this market would still remain bullish in this market. So anyway, let's run right into the charts here. Nothing really has changed, and I want to really discuss Apple a little bit more in detail. But here's our NYMO, and as you can see here, we ran up. Yesterday, we kind of pulled back a little bit, giving us not much of a reading. But again, this state telling me that we can move higher and we can move lower without saying that we are overbought or oversold yet. We are closer to getting more overbought, obviously, than we are oversold. So above 70, 80 here, I would love to see. I'd love to see a spike one more time right up in this area. Now, on our weekly charts, on our other charts that we have, the sector charts, you'll see where I think the market may stop. And that's based on those inverted head and shoulders. Here's just the weekly 5-3 that I plotted it with an S&P weekly chart as well. Since it is Thursday, I want to take a look what's going on. This is about 8-9 weeks of full gains, except one pause week we had. And this is something that I am keeping an eye on, and this could help Apple, could actually if we do have a big down day today, tomorrow, maybe we get a sell signal in this. But if anything, it would probably be for next week if this were to occur. Take a look at our NASI. This is the regular NASI Summation Index Daily. And now look at how elevated we are here. This is back from September. We were up at these levels, roll right back down again. So, again, something I'm watching. This is not a trigger to sell the market. We want to see the market roll. We want to see price roll over, take out pivotal lows. That is the trigger, right? Price. And I'm going to show that to you in the charts as well. BP bullish percent index really elevated here at 79%. Back at these areas again as well. So just again, something to keep an eye on when you're trading these markets as a whole, right? So we want to get our picture at night, see what happens in the morning, and if the market opens up and it opens up above main pivot and the market continues to grind higher, then you want to really be looking for strengths, real strong stocks that are pulling back, and you want to buy them, regardless of where the market is and how high the market is as of right now if you're trading for the day. Okay, here's a 10-year yield again here, flagging above this symmetrical triangle. I showed you the TNX, same things with the yield. Really use caution here. This is something I will be watching in the coming months, because if the yield starts to rise a little bit, then I think that's going to really put a cap on this rally. But I think this is going to be some time. This is going to take time. But again, just a longer term picture I wanted to show you. Now here's what's really scary. Look at the tick, 700. I mean, that is really absurd. And if this is not a warning sign of the tick, I would really use caution here. And I'm not talking for the day trades. I'm really expressing myself more for the longer-term investor, swing trader. Puts are so cheap right now. It's worth the insurance so you can sleep better at night. I mean, all you need is one real bad catalyst, and this market will fall out of bed, and in a real scary fashion. Okay, now I want to just show you the VIX. VIX put in a black candle. Usually black candle says could be a possible reversal in stock charts, but we'll see. This is, to me, a pause. This thing could go lower, but again, let's see what happens with Apple. Maybe Apple affects the market for a few days, but Apple is starting to disconnect itself either way, and I'll show you that as we go on. All right, now let's go right into the charts here. Okay, lower volume again, as you can see here on our Spiders daily chart. We have a 151 target. We are at 149.57. We are almost there, but I do think that to go straight up, maybe we pause, we flag for a couple of days, hit the lower trend line, and then one big spike back into this 151 area. But however, we are close to this area, and as you can see here, we've been grinding up ever since the 2nd of January of this year. Now low volume again started. We had that one big spike up, and then again low volume. We're at 97%. Our MACDs here are way elevated. Now, I got a good question yesterday from one of our members, and they asked me about the MACD stochastics. And I do look for divergence in MACD stochastics. I don't use it in my intraday trading plan. Some people do. I just don't. I look at price. I look at what the volume's doing, and I also look at where my pivot is and where price has been. That's really important. But again, to use a trigger, if you're looking at a daily chart, I'm always looking at the previous days. So here is really going to be your a target where if the market were to roll back down, you would start nibbling in a long position. If you're a longer-term investor. Me, I'm looking more of a deeper retracement. I'd love to see this gap be filled. I don't think that might happen at the moment, unless obviously there is some sort of a negative catalyst out there. Other than that, a pullback here to adding to your long position is fine. But remember, we're at really, really lofty levels, and we did get some inflows from mutual funds. Really important to look at that. You can look at that through the Wall Street Journal market data. We did get some inflows. That means there's a lot of longs starting to buy up here. That's a scary little feeling here, especially at these levels. Now, the market could go higher. It could go to 1550, 1575, which would be the 2007 high, and then really start to roll back over again. So I'm not adding to any longs. I'm not putting any longs on. I'm just looking for quality trades. And that will happen as the days go on. You'll see how you build your day and build your month accordingly, especially when you're using caution and you're keeping your pallets dry. Because when you start having a long bias and with this market and you start building positions, the last thing you want to see is this market roll over. That kind of hinders you on getting out quickly because it's just human emotion. Just something to think about. But anyway, back to the MACD stochastics. I'd like to see the MACD stochastics start to roll back down. I want to see the MACD start to break the 80 area here. And once that happens and we get price taking out these previous day lows, then I can say you have something. That's really some sort of a trigger for me to start saying, you know what, we broke out yesterday's low, I'm going to short the market, and I mean for the day, okay, until we really start to break down and take out key support areas. That's when I would look for swing trading opportunities. Okay, now let's take a look at our S&P 500. I just realized I didn't mark my head and shoulders, my inverted head and shoulders, which I had the last couple of months. 1520 is really going to be the spot. We're at 1494 right now. We did break out, and we are moving higher. Now, CCI is starting to pick up a little bit of steam here, right above the 100. This is exactly what you want to see. Again, but, straight up, I'm a little cautious about that, a little cautious on that. 60-minute, we did have that negative divergence that I pointed out. That did not happen, okay? We needed a trigger, right? We have negative divergence. Now what do we need? We needed to break the lower trend line. That did not happen. Negative divergence negated, and the market continues higher. Okay, that's what I mean about a trigger. We need a trigger. If you see something that you want to buy or sell, okay, what is the reason? And where's going to be my entry point in that trade? And we did not get one. We had to break the lower trend line, so this negative divergence did not play out, and actually still continue to grind higher. I do see, if I see a 1477 break, that's going to be my cue to start looking for be more aggressive short intraday. And believe me, there's going to be plenty of shorts out there and plenty of time to make up any lost time if you haven't traded. But 1477 on the low side, that's going to be my my entry point. 30-minute S&P with the Bollinger Bands, as you can see here, we really had nothing to do this whole month up until the last couple of days, and now what we're doing is just grinding higher on low volume, Bollinger Bands are pinching again. Let's see if Apple affects the market today. Here's the diamonds. We did move up, and again, that's because of IBM. Otherwise, I think the diamonds would have been up fractionally small and/or on the downside. But you see here, our indicators are way overbought. And again, these are just warning signs. Overbought in a strong market could be overbought for many, many months. So please keep that in mind. And I wouldn't be playing the derivatives of the VIX. Very, very dangerous to deal with, because if they continue to move up, they depreciate 2-3 times more than if you were holding a stock position, an inverted stock like an SDS, which you would buy to be short. IYT Transports defying gravity here. Great, exactly what you want to see if you're long, guys. Continue to move higher. Again, I think it needs a break. I think the whole market needs a break, but the market will do what it wants. Nobody knows where and when the next day what's going to happen. This technical analysis gives us an idea, and we want to use that for our trading plan so we can be better prepared for the next day. All right, now IWMs had a little bit of a down day yesterday. Basically hit our target. If we hit 89.30, let's call it 89.35, 89.50. The IWMs hit the target here. Now, I had many emails. You really think the IWMs are going to go to 89.50? I don't think anything. It's what the charts are telling me, and sure enough, I could call that basically a target hit for the 89.30 for 12 cents. But amazing how it actually hit the target. And now let's see what happens here. Do we start to roll back? And that's what I'm going to be watching in the coming days. Is risk off? And also with some of these currency pairs, you might want to watch the Aussie dollar, the Euro dollar, the New Zealand dollar, and see if risk starts to come off. If risk starts to come off in the currency markets, then it's probably going to follow what equities are going to be doing, and or vice versa. So IWMs I'm going to be watching. I'm going to also be watching the JNK, which is the high-yielding junk bond ETF. That's also a risk-on sentiment, a good gauge of risk as well. So that's something that I'm going to be watching as well, and the NASDAQ. All right, so here's Apple. Let's take a look at it. We've been calling this from, I think, 690 back here, and I said, look, be careful, head and shoulders. We had some divergence, sure enough, played out, and now we're back up into this area here. So I added some more information, but this is what I've had for months. Break below the trend line will likely test a lower trend line of 467. Apple actually traded down to 457 actually, excuse me. So we are at the lower trend line now. In the next couple of days, Apple is going to need to get back above this trend line and hold and really start to gain momentum. Otherwise, I think Apple's in really, really big trouble. Regardless of the $150 billion cash, when everybody wants out, it doesn't matter that the stock's cheap. I'm just saying that this is exactly where this thing needs to hold. The 467-ish closed at 463, I think, in the after hours. If it breaks this trend line on a closing basis, give or take 1 or 2 days, I think the next area you're going to see is the 420. Then I think you're going to see 350, and then I think you're going to see 275. And I know that's out. That's far-fetched. I'm not saying it's going to happen in 3-4 days. But if Apple doesn't come up with something, they said they restated their dividend. No change in the dividend. I just think that Apple's in real big trouble, and I'm just giving you key points here of what levels to be looking for if it starts to break down. Do I think it's going to get down there? I really don't know, but I will tell you that the 467 break, the next area, which is a very valid area, will be 420, and then of course the 350. This will be the longer term view with 275 if it does decide to break there. Now nothing goes down in a straight line. You'll probably get some big moves up. Had a couple of email stating when that one day Apple jumped up like $22. I said, don't even be worried about that. Stop looking to get in that. That one big day was just a one-hit wonder, shorts covering. That's all it was, and sure enough, that is exactly what it was. So please use caution if you are trading this stock. I am not. Just giving you analysis. Apple is a big bellwether stock, and we need to know what Apple does, believe it or not, whether you trade it or not. Here's the daily chart. We did have a bullish fallen wedge kind of forming, and here's our inverted head and shoulders, and that inverted head and shoulders 460-ish area is going to hit our target today on the opening. So that has hit the target. Now, if you look at this, right, in this other head and shoulders, we had a head and shoulders. What happened? Downtrend, right? We had another head and shoulders here, downtrend. Now we have another head and shoulders, downtrend. So as you can see, repetitive patterns, they repeat itself, they work. So very simple. If you have an open mind and you're not emotionally attached to the stock or any stocks, you can see how it does play out. Okay, so this in this sort of bullish fallen wedge did not play out. Okay, and again, this is it's a little bit awkward on the bullish fallen wedge, but nonetheless, I wanted to point it out to see where this goes. So here it is, guys. Here's Apple. Let's see if it can get back above in the 467 area, 470 today. If it does, there's something that that you really need to take note of and make an honest decision to say, hey, do I really hold this? Am I in bed with this thing, or is it that I can something that I can have a tradable, something that's going to be tradable? Now, here's one thing I found on the internet, which is actually a great little chart. Here's the Apple chart, short interest, and here's the closing chart, short interest in blue. As you can see, we had a high short interest going back from dating back from 2012. This is probably the end of the year, and look what happened. Dropped dramatically going into earnings. Dropped dramatically now. So that's all. This isn't shorts that are pounding the stock. This is all real sellers getting out of this stock. Okay, now, and whether it be getting out pre-earnings, but this is something really interesting to see that now you have a lot of long sellers here that were really getting out of the stock and probably are still getting out of it. And now you're going to add fuel to the fire of some shorts. So any kind of a large short covering bounce, I don't think that's going to happen, at least not now. All right, so just keep an eye on it. Please use caution when you're trading Apple. You know, it's a very dangerous stock. It's a very high emotional stock. A lot of individuals own it, mutual funds, hedge funds. So you want to really use a lot of caution with this, all right? Okay, guys, have a great day. We'll talk to you tomorrow. Let's see what happens today. Let's see if Apple influences the market in itself. Have a great day, everybody.